from the heart of where innovation, money, and power collide. In Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
I'm Caroline Hyde, in for Emily Chang. This is Bloomberg Technology. Coming up in the next hour, supply chain pain continues ahead of the shopping season, with retailers struggling to keep supply up with demand. How Amazon is sacrificing profit to meet delivery times. Plus, Zoom has lost $100 billion from its peak as the pandemic-fueled rally fades. We're going to be live with the Zoom CFO, Kelly Steckelberg, on how the video platform is planning to maintain momentum going into 2022, and how the tech behind cryptocurrencies is being used for real-world emergencies. Ava Labs is partnering with Deloitte to use the blockchain to empower first responders while out in the field battling natural disasters. We'll get to all of that in just a moment, but first, let's get to where the markets managed to show a little bit of green. The Nasdaq 100 outperforming. Bloomberg's Kriti Gupta is here, and it was thin volume, but it was higher.
A little bit of holiday volume already. Markets kind of hitting the snooze button, but nevertheless, the S&P 500 ending in the green. Now, we had a slew of economic data, but the takeaway here is that the consumer at the end of the day is still strong. That inflation metric that the Fed uses still not skyrocketing to the point of worry. And that's really why you're seeing these marginal gains in the S&P 500. But like you said, Caroline, tech has been outperforming. You see that with the New York FANG index just a little bit higher. I threw onto the board the Bloomberg dollar index and yield as well, because of course we know tech is extremely sensitive to yields. That's a relationship worth watching, but so is tech's relationship with the dollar, because at the end of the day, they are both these global havens. So really keep an eye on that. But as I talk about yields, I really want to talk to you about bond volatility in particular, because as we start to wait for more signs of this Fed liftoff, this rate hike liftoff, bond volatility, I think we have a chart here, bond volatility has actually been extremely high. Equity volatility has been kind of low, but you're starting to see that creep up a little bit. You can see at the very edge of this chart, the white line starting to hint up, which tells you in the next couple of weeks, as we get more signs from the Fed about what's coming next, equity volatility and tech stocks in particular, which is a big part of the index, of course, is worth watching. Let's get back to the intraday action, though, and talk about what happened today. I said the tech was outperforming today, and you can really see the semiconductors in with that trade, up 0.9%. Chinese ADRs as well, another big component of that New York FANG index, up 1.2%. Biotech up marginally as well, but it was crypto that's been the outperformer lately that actually was the laggard today. That's your macro story, but all the action really was under the hood. For those details, we go to Ed Ludlow.
Yeah, you mentioned strength in semiconductors. I want to get to some of the movers in the day. And in terms of the biggest points movers on the Nasdaq 100, it was two chip makers in particular that I'm keeping my eye on, AMD and Nvidia. AMD, that stock trading at a record high, the biggest jump in 2 weeks, up 5%. Nvidia also rebounding from 2 days of losses. Remember, we've been talking about Nvidia as having such a significant weighting in terms of technology stocks that are in the S&P 500. To the downside, Electronic Arts still under pressure. Been a lot of selling on that stock recently. Battleground 2042, its latest title, not doing so well. And this one's for Caroline, actually. Autodesk. I want to talk about Autodesk, down 15%. This isn't a stock that we talk about. This is the $55 billion company that we never talk about, but I kind of feel that we should. They make software for engineering companies. They make software for builders who are in the early stages of big construction projects. Look at that precipitous fall on its earnings. It's basically narrowed its forecast for this fiscal year, citing supply chain constraints. And I thought to myself, hold on. You're in the early stages of planning, but what they're saying, the executives, is our customers are suffering, right, in these industries that are suffering because of supply chain crunches, and we are suffering as a result, kind of giving some very conservative guidance there. Finally, Caroline's been talking about this all day long, retailers, because we are on the cusp of Black Friday, this busy period of November where there's so much retail activity, the biggest drops on record for Nordstrom and Gap. They just can't manage the supply chain. They're not able to get inventory. It's a missed opportunity for sales. And Amazon pretty much flat. Just want to mention some data very quickly from Adobe that in the month of November so far, out of stock messages are up 227% year on year versus January of 2020, right? And against pre-pandemic levels, November 2019, up 261%. That is what consumers are facing this week as we go into the Thanksgiving and Black Friday period. And it's really interesting for those that are trying to kind of trade off between brick and mortar and, in Amazon's case, e-commerce.
Exactly. If they are managing to weather that supply chain pain, so smart, Ed Ludlow. We thank you. Mentioning, of course, the out-of-stock messages, 2 billion of them. in October alone in the United States. 325% from October in 2019. That's all according to Adobe Analytics. Jordan Holman breaks down why supply chain disruptions may mean fewer Christmas discounts and perhaps a disappointing Black Friday.
Looking to get your little one a Tonka truck this holiday season? Well, you're gonna have some trouble. And if you want to give your spouse a personalized ring or pendant, you may already be too late. The National Retail Federation sees 8.5 to 10.5% consumer shopping growth from last year, pushing forecasts to almost $860 billion. But as shoppers begin spending on gifts, many aren't finding what they want online, or they're seeing bare shelves in the stores. This year, supply chain issues are threatening to derail everything. 2 billion out-of-stock messages were sent in October alone. That's up 325% from the same month in 2019, according to Adobe Analytics, who is seeing electronics hit the hardest, followed by jewelry, apparel, home and garden, and pet products. After 2 years of shopping disruption, it's safe to say retailers need a win during these crucial months, but it won't come easy. Concerns around COVID shut down factories in Vietnam this fall, which slowed down production. Containers are piling up at the ports on both the west and east coast of the US. There are too few drivers to shuttle the goods to distribution centers and not enough space in warehouses. And all of this could affect the types of gifts that you want to get for your kid, your spouse, or pet. Retailers, especially mom and pop shops, say that they've had trouble getting Tonka trucks, puzzles, teddy bears, bikes, you name it. And if you usually get a Christmas tree, this year, both live and artificial trees may be harder to come by. Jewelers are saying better quality, larger cut diamonds may be in short supply. Even florists are having a tough time getting everything from tulips to white roses. You may even notice the supply chain bottlenecks when walking into a store. Ever see more denim jeans than cotton shirts? Things like books and dolls set to go out on sale just in time for this holiday season are hitting weeks-long shipping delays.
Shipping delays that look like this. While retailers race against the clock to stock shelves ahead of the holiday season, containers full of goods pile up outside of the ports of Los Angeles and Long Beach, in the streets of Wilmington, in the outskirts of the Twin Ports. Officials say between 150 and 200 citations are issued for misplaced containers every week.
For the folks who've already started their holiday shopping, more than half said that a product they wanted to purchase in a store or online was already out of stock. Plus, retailers aren't looking like they're going to offer as many discounts this season. This holiday season isn't the return to normal that the retail industry expected at the start of this year. It has its own set of challenges. The biggest message they're trying to tell people is, shop early to make it a merry one.
Need to get me a wreath. Jordan Holman there. Meanwhile, Amazon, on the other hand, is prepared to actually sacrifice the bottom line to get products to customers on time by going a pretty unconventional route, literally. Now, I want to bring in Bloomberg News reporter Spencer Soper, who covers all things Amazon for us in Seattle. And all things Amazon is thinking creatively about how to get your goods to you at the right time.
Yeah, there's several examples of that, and where Amazon just finds an alternative solution. You know, so if the ports in Long Beach are clogged, they'll load up and shipping space is scarce. They'll find a ship just with some space. We found an example of that where they had a ship that was loaded with rolled steel ultimately heading toward Vancouver in British Columbia. They loaded it up with containers and inventory, just the deck of the ship, because the hull of the ship was already spoken for. They sailed it into a sleepy port in Everett, about 20 miles north of Seattle, that usually serves the timber and lumber industries, and basically use that as a way to get inventory into the country. Even though it's not ideal, even though it's not near all of their warehouses in Southern California, it was still a more expensive and trickier way, but still a way to get inventory in for the holidays. And that's the message they've sent, is that they're willing to spend whatever it takes, do whatever it takes to not let customers down over the holidays.
And that's kind of very in keeping with the Amazon we've known to understand on the public markets for years now, Spencer. It's interesting that, are they favoring themselves, their own products, or what about some of the merchants?
They're favoring their customers. They'll take inventory from anyone. And so, as you've been discussing previously, in these businesses that are having trouble, Amazon is very diversified in its supply chain. It has its own products that it sells, its own branded products. It serves as a retailer itself. It'll buy the inventory wholesale and sell it. But more than half of the products sold on Amazon come from independent merchants who put their products on that site. And so that depth, it's more than 1 million merchants. That depth of inventory coming from so many different places really gives them an advantage, because the difference on Amazon is, rather than looking at an empty store shelf, in a store, on Amazon, if you're looking for something, even if you're not finding precisely what you want, or even if it's not from Amazon, they may have an alternative source for it, or just an alternative product that still suits your needs. So it's where this abundant inventory is really going to come into play.
So they've got the inventory in, now they need to get it to you. Can they do that?
That's going to be the ultimate test this holiday season. And that's where, if Amazon breaks down, that's where it's going to be. They're facing a labor crunch. They've had to offer signing bonuses of up to $3,000 in some warehouses just to get people in the door to pack boxes. Their delivery operation, which is made up of these small businesses that operate the Amazon delivery vans, they're all struggling to hire drivers and keep drivers on the road. So that's where Amazon's ultimate test is going to be: kind of get it to your house in time.
Spencer Soper. It's a great read. Go and urge everyone to go and read it online or on the terminal. We thank you. Wishing you a very happy Thanksgiving. Meanwhile, coming up, we'll talk to Zoom CFO Kelly Steckelberg about the company's latest earnings report, as well as the future of work. That's next. This is Bloomberg. So we've seen a steady rise in work-from-home stocks since last November, as more and more people adopt a hybrid, or actually completely remote rhythm. But as things start to settle down, we're seeing a slight slowdown in the work-from-home index, which includes companies such as Zoom, DocuSign, Workday. And Zoom, of course, after a fast rise in the early days of the pandemic, when millions of people adopted its software to remotely attend classes, conduct business, to do their meetings, to school their kids. Well, now the company doesn't seem to be keeping up with that index. This as shares slumped on Tuesday after releasing slowing year-over-year growth in their third quarter earnings report. Let's digest this and talk about future growth with Zoom CFO Kelly Steckelberg to unpack all of this. Kelly, it's always hard when you see erosion in your share price, I'm sure, and I'm trying to steady the narrative to your investors right now. What are you telling investors in terms of the growth trajectory, which inevitably slows down as people perhaps come back to the office a little bit more?
Well, first of all, just to remind everybody that we reported earnings for Q3 of over $1 billion, which was 35% year-over-year growth, and gave outlook for the full year of over $4 billion, which is over 50% year-over-year growth. So we're really proud of everything we have accomplished. And we are excited about the future, especially about the future of hybrid work. Work is really transitioning. It's no longer a place. It's a space where people get their work done. And Zoom is really at the forefront of bringing teams together and keeping them connected and efficient. And we are really making this transition from being a killer meetings app to a communications platform that is comprised of not only our meetings feature that everybody knows and loves, but also Zoom Phone, which is our cloud PBX solution, Zoom Rooms, which is a conference room solution, which is really important and a key part of the strategy when you think forward to hybrid work. And then, of course, we have products like Zoom Events, which we just launched 90 days ago, as we look forward and consider that events are also going to be hybrid in the future.
I'm interested in, how you continue to build an ongoing conversation with your investor base? Because to a large extent, perhaps they got too over-enthusiastic about where future growth could. And you just spelled out, I mean, you beat in many ways the third quarter earnings expectations. You're talking about this growth that is to 30% or 50%. However, did investors just expect too much? Or was it also the fact that some of the M&A that you wanted, the inorganic growth, couldn't come off for this time round, but now you look for your own organic growth?
I think that we experienced growth last year that was completely unprecedented and had never been seen before. And the way that we talk about it internally to our teams and also to our investors is, we really can't control the stock price. What we can control is our execution. And we focus on delivering happiness to our customers and our employees every single day. We do that by innovating and creating the most reliable and intuitive products that support our customers' needs. And that's the best that we can do every single day.
Talk to us a little bit about contact center as a service, the Five9 deal that wasn't meant to be. There was hope, certainly from our own internal analysts and some analysts on the call, that you will still pursue that as an avenue of growth. And interested as to whether that is a merger story or whether that will be something that you look to enhance and build on internally and how you execute.
Yeah, so we were certainly excited about the potential of the Five9 acquisition and think really highly of that team, and they remain a very important partner for us. However, Video Engagement Center is a product that we actually announced at Zoomtopia in November, and we expect it to be generally available in the first half of next year. And we're looking forward as a way to bring a really fully natively integrated product to our customer base and think that it absolutely will be a core part of our platform moving forwards.
I'm interested as, you look towards looking at conferences, looking at new and different ways that you continue to spell growth. What is it that most excites you going into 2022? What do you think is going to outperform where people are currently factoring in?
I think Zoom events is going to be a really key important of conferences, as you say, as we're all excited to be back together in person. However, companies have seen just this tremendous efficiency and reach that they've gained by having virtual events. And so Zoom events is going to be able to bring those two together and support them. So that's really exciting. And then also, I'm just going to circle back to Zoom Rooms. The conference room strategy in terms of how companies are going to be able to bring their teams back together in an inclusive way, the conference room is going to be front and center to that. So we have features like Smart Gallery, which recreate this experience where you can see everybody's face on the screen, even when there are many people in a room together. And things like companion mode, which allow you to interact with the meeting with things like chat and polling. So recreating the benefits that we've had all working remotely when we go back to a hybrid experience.
Zoom CFO Kelly Steckelberg, wish we had more time. Thank you for spending some with us. We wish you a very happy holidays. Meanwhile, coming up, Elizabeth Holmes taking a stand. We'll talk about the latest in Theranos trial as we learn more about the former CEO in her own words. That's next, and this is Bloomberg. The trial of Elizabeth Holmes, it continues, and now featuring Holmes herself. Now, the founder of the failed blood testing startup Theranos, once hailed as the next Steve Jobs, is accused of multiple counts of conspiracy and fraud and faces up to 20 years in jail. And as we are now finally hearing from the former CEO herself, let's bring in Bloomberg's own Joel Rosenblatt, who brings us up to speed with it all. And Joel, I mean, you've been in the courtroom since the trial very much started. This is almost coming to a climax to a certain extent. How interesting was it hearing her, take the stand in her own defense?
Well, this was the big question, whether or not she was going to take the stand. And when her attorney called her, it was a big surprise. It came late on a Friday afternoon, and she only spoke for an hour, and nobody was ready for it. So it was a big deal. It was a big deal, very exciting for everybody, especially everyone who's been spending 2.5 months in that courtroom waiting to see if she would do that.
How did she present herself? Of course, this ends up becoming somewhat of a blame game between her and Sunny Balwani. Of course, many realizing they had an intimate relationship as well as a business relationship. But what tone did it take?
She comes across as very relaxed, and she started off nervous. When she took off her mask, she looked nervous, but she quickly settled in. Gone is the black kind of turtleneck and kind of Steve Jobs costume that people like to make fun of. She's wearing conservative colors with a blazer, and she comes across as a chief executive, not a flashy Silicon Valley leader. In this case, almost more lawyerly, just very calmly answering questions, leading questions often by her lawyer. And she's presenting herself to the jury and to the world as somebody who was in charge, who was flying very high and not aware of all the details that might have led to the charges that she faces. Just not aware of all the details that led to the criminal charges that she's fighting now.
Okay, so sort of almost claiming naivety or too much busyness, really, to have a grapple on the finer details that end up becoming so important. The devil will be in the detail that she perhaps didn't grasp, and that will be in also exposed in the cross-examination, I imagine.
Well, that's right. It's in fact, while I say that she's kind of not aware of the details, that's mostly true. She did at one point admit to a problem. I mean, she can't just, on her testimony, just ignore the charges. She does have to address them. And at one point, she did admit that she did something wrong, that she wishes she had done it differently, which is to kind of lift the logos of pharmaceutical companies onto reports that she used to get, that she said were endorsements of her technology in order to get investments. So she's walking a fine line. But as you point out, the real test here is the cross-examination. That's going to be the real test for her. What she's doing right now is something she's familiar with. She's pitching her company. As I said, addressing some of the charges. The real test for her will be on the cross-examination, which is the moment that we're all really waiting for. You alluded to it earlier. It's not clear yet how much she's going to blame her former boyfriend and the Theranos former president, Sunny Balwani.
Of course, this is something of deep interest to Silicon Valley, but how global does this go?
I'll tell you, it goes across the globe, or at least certainly to Europe and beyond, because, well, first of all, you have reporters from really papers across Europe who are interested in it. I think it speaks to the reason it's so interesting is because, a trial is not a debate. It's a narrative. It's theater. And the question here is how far can you lie in order to get what you want? And I think that's just a universal and global question that people want to know the answer to in this scenario and in this case.
Well, thank you for bringing us some of that theater, Joel Rosenblatt. We thank you. All-important cross-examination coming up Monday, Tuesday. Meanwhile, coming up, we use blockchain to help fight natural disasters and improve first responder coordination. We're going to be talking to Ava Labs President John Wu on how his company is partnering with Deloitte to use the crypto tech to assist local and state federal responders. This is Bloomberg Technology. I'm Caroline Hyde. Let's get back to the financial markets. Bloomberg's Ed Ludlow keeping an eye on, well, all things crypto today, Ed.
Yeah, I mean, cryptocurrencies broadly have been under selling pressure for a few days, right? There's been a lot of chatter out there about growing regulatory risks. There's a fantastic story on the Bloomberg about, chartists basically looking to the technicals to try and find direction. You can see we're softer across the board as we spill into Thursday's session. Bitcoin lower, hovering around 57,000. I wanted to zero in on Zcash, though. I've not really tracked this token in particular, but it had an astonishing day Wednesday, the best performing cryptocurrency of those that Bloomberg tracks. And look at its performance year to date. It's kind of gone under the radar. We don't talk about it as much with its sort of modest $260 per token value. But you can see it has performed well year to date, not quite at the highs that it was at in May. And it's interesting because it's very similar to Bitcoin, right? It has a limited supply, 21 million tokens. It's basically designed with privacy in mind. But there was news on November 19th that the developers is going to move from a cryptocurrency to a proof of stake rather than proof of work. I'll give myself some homework. I don't really know the full extent of what that means. I'll go away and find out. But there's a lot of chatter out there about this kind of being supportive of this particular coin. I also really want to briefly touch on Coinbase. There's always so many headlines about Coinbase, right? All kinds of stuff. You see, we're actually softer by 1.5% on Wednesday. There was some M&A news. There was news that kind of key Democrats are taking interest in Coinbase. They're asking difficult questions, writing letters to executive. Here's the one I'm looking at. Adidas or Adidas to some people, tweeting, saying its Originals brand, Adidas Originals, has partnered with Coinbase. There's a tweet. But they also say probably nothing. And Coinbase replies, handshake emoji. So Bloomberg News has asked each of these respective companies to comment and explain what they're talking about. They haven't replied, but I'm sure this is something we'll find out more about. This is where we've got to in the world of cryptocurrencies and traditional business. Well,
it's definitely Adidas, though. Let's face it.
It is definitely Adidas, yeah.
Well, of course, Nike been looking into all things NFTs as well. Ed Ludlow, we thank you so much. Meanwhile, Kathy Wood has chimed in and says China is not uninvestable. The ARK investment founder and CIO exited most of her positions in Chinese stocks earlier this year, but says she sees a bit of an opening and she's waiting till the valuation dust settles. Spoke in a Bloomberg Intelligence webinar with Bloomberg analyst Rebecca Sin.
One of the reasons we built up our position in China in 2020 was because we saw China's response to the coronavirus crisis was much more responsible from a policy point of view, both fiscal policy and monetary policy, than many other countries around the world. And we thought, okay, maybe China is going to become the new Germany or Switzerland, known for its monetary discipline and fiscal discipline. But what happened in November of that year was somewhat startling. The episode with Jack Ma and watching how he and many other executives who had created incredibly rapidly growing and exciting companies, they basically were told, and maybe there was some reason for it, but you're not welcome there anymore. You go off and do some charitable work or whatever the message was. And so that's what they're doing. We became concerned about that. While that kind of rhetoric and activity is taking place, so you're right, we pulled away very early, entirely out of our flagship, not out of all of our specialized portfolios, because in autonomous technology, for example, JD Logistics, JD.com, they have low margins, very friendly from a capitalistic point of view, and they're helping to push new goods and services into tier 3 and tier 4 cities, which is great. But there was so much uncertainty created by one regulatory crackdown after another and after. We didn't know where it was going to stop. Now we're seeing a little bit of an opening up. Even with the online education, we see, okay, well, you can't tutor children after school, but you can tutor professionals. And so now there's a little bit more give there. But we think the valuation of the Chinese market has been hurt significantly by this, and that the way the Chinese market will have to grow and stocks will have to grow is if the underlying companies themselves grow.
Bloomberg Intelligence analyst Rebecca Sin there, speaking with ARK's Kathy Wood around all things about China. Now, remember, Kathy Wood, of course, a big supporter of blockchain technology, of certain exposure to crypto. And blockchain was developed for use in, decentralized currencies. It's not just, though, crypto that benefits, or indeed speculation that benefits. Ava Lab has partnered with Deloitte to use open source blockchain technology to build software that will empower, in fact, first responders to stay connected, to streamline response to natural disasters and emergency situations. I want to bring in the president of Ava Labs, John Wu, who's our weekly cryptocurrent segment. And I mean, for once here, John, we're able to really talk about the practical use case of the underlying technology that is the blockchain, because in many ways it's become our favorite thing to talk about in terms of speculative assets, but we're all waiting for a DApp to work or indeed some sort of practical use case, and you got one.
Caroline, thank you for having me. Good to see you again. And yes, this is a big moment. The use cases you have seen up to now primarily have been crypto native use cases, whether it's decentralized finance or meme coins, as we talked about earlier. But this is one of the first times where a Fortune 500 type company or a Big Four consulting firm has decided to build a solution, the close as you go solution in this case, for their end customers, in this case, government agencies. This is a very big deal because Deloitte has estimated that they can save the government 50 to 80% of the all-in costs. And what it means for the actual end user is that poor victims in a disaster zone are able to get their grants literally days or maybe weeks, as opposed to currently where they get it months and sometimes half a year. This is a huge deal. And if Deloitte has trust in a blockchain like Avalanche for security and have better workflow automation, data management, and collaboration in the thousands of parties that's required here, that is basically the beginning of a big trend. And utility and adoption is really happening now on public blockchains.
In many ways, the way in which you sort of raise the profile of Avalanche vis-a-vis the likes of Ethereum blockchain and the like is smart contract-enabled application, but that much faster, that much low cost. It's interesting you also, raise the focus of eco-friendly, and I want to understand how you're presenting yourself as eco-friendly at the moment.
Generally, when people think blockchains are energy consuming giants, it's relating to proof of work. And I think Ed earlier talked about proof of work versus proof of stake. Those are usually related to, right now, Bitcoin and Ethereum. Most of the new blockchain companies are proof of stake. It's more software-based, less hardware. And in Ava Labs or Avalanche, the blockchain's case, basically, we had an outside consultant do work, and the energy that is used up is no different from 12 US households a year. So it's minimal, relatively speaking. And on top of that, Ava Labs has bought credits in the market in order to offset even little bit of energy that we end up leaving in terms of carbon footprint.
Okay, interesting. Let's talk about your token. Is it AVAX, how you say it?
Sure.
It's been doing very well. And of course, this Deloitte deal helps it push up to sort of record prices. Does that matter to you? How much is that important in terms of bringing more people into the ecosystem, wanting to contribute, wanting to be part of it, and ensure that it continues to grow?
That is everything. It's about adoption. It's about utility. And I think Ed was talking about it in the earlier segment where the entire space has sold off because of fear of regulation. But the bigger story is not just the sell-off in the entire asset class. If you look underneath the hood, there's been more dispersion in the last few months than ever before in these individual tokens. The tokens and the companies and the projects are actually showing real utility, usage, either through individual adoption or in case of enterprises like we're talking about with Deloitte, transactions on the chain. Those are the ones that are actually doing better. Even with a down market, those companies or those projects have actually had increasing value in their tokens. So I am fortunate enough to sit in a seat where I talk to entrepreneurs, developers, investors, and users. I get a firsthand view to where the usage is coming from. And I see the correlation between usage and prices in these coins.
Let's just go longer term and where Ava Labs wants to go. Avalanche in particular, it's all about speed, velocity, to finalize transactions. You're looking at DeFi now. You want to look at sort of the old school world of finance longer term. Paint the picture of what Ava Labs does or is in 5 years' time.
Well, in 5 years' time, Ava Labs, who's the team behind Avalanche, is going to be one of the big players in the space. It is probably the fastest. I think actually it is the fastest, no doubt, based on finality blockchain out there. And in terms of growth on the chain, it's the fastest in terms of usage, number of wallets, as well as transactions, as well as value on the chain. Where we will be in 5 years is ushering this movement from just crypto native usage to more Deloitte-like situations where traditional enterprises are now going to use public blockchains because it's better for collaborating, better for instantaneous transfer of assets, better for information sharing, and save companies even more money. This is like software eating the world to the next level.
John Wu, Ava Labs president, we thank you for your time. Wishing you a happy holiday. Meanwhile, coming up, we're about to enter the biggest shopping season of the year, talking holidays. We'll talk about what to expect with my next guest, who just became one of the country's richest self-made women, thanks to her work in the world of retail and e-commerce. This is Bloomberg.
Now, parents are busy. I promise I understand that. And we still have a responsibility to make sure that the default experience is as safe as possible. But we think that empowering parents is an important part of the solution. And you're going to be hearing us talk a lot more about not only parental controls, but safety for young people online more broadly. And I'm going to be talking about these issues with Congress relatively soon.
Head of Instagram there, speaking about his upcoming appearance before Congress. Adam Mosseri has agreed to testify before a Senate panel early next month. It's part of a series of hearings into the effects of social media on children. Meta announced in September it would pause plans to create Instagram for kids, following a series of reports from the Wall Street Journal outlining the app's impact on young users. We've been talking a lot about, well, e-commerce, retail ahead of the busy shopping period, and also the influence of influencers within that. Let's get insights from someone who is knowing a thing or two or three about shopping trends. She's just received a $300 million investment from SoftBank, the vision fund there, into her company LTK, which is a shopping app that allows creators, influencers, to let users essentially shop for what they post. This latest investment now values her company, when she started at just 23, at about $2 billion, making her one of the wealthiest self-made women. Joining us now is Amber Vensbox, co-founder of LTK. Congratulations, you and Baxter, coming forward and building this business and educating people on the power of influencers, of blogging. I mean, first and foremost, did you expect to get here?
I'm so thrilled that we did. We've always been the advocate of the creator, and I'm a creator myself. And growing up, I just wanted to be able to make money online as a shopping blogger. And the fact that we've been able to do that for me and my friends and for hundreds of thousands of women worldwide is a really incredible moment and an opportunity truly of a lifetime and hopefully of a generation.
It used to be known as Reward Style, Like to Know. That's where the LTK comes from. Largest global influencer marketing platform. What exactly does that mean, Amber?
Exactly. Well, we pioneered a new industry. We started really working on this concept back in 2010. It started as a B2B platform. So we helped creators by providing them with a business enablement platform to monetize their fashion blogs. And then we expanded to offer a brand platform as well to help them connect with creators who could help them to sell more things to more people. And then in 2017, we launched the Like to Know It shopping app. And that was our first really platform for consumers to be able to go shopping from creators or creator guided shopping. And then we just this summer, we moved to just go by our common name, our acronym LTK.
And so as we were just hearing from the Instagram head there, and Instagram's been trying to make a lot more shopping experiences within its app, the same as TikTok. How does that work alongside your business, or is it a cannibalization in some way? What does LTK bring to the table there?
So while this industry has been pioneered over the last 10 years, it's actually quite robust. And so when you think of the social media platforms, they're really part of the larger ecosystem, and they're a really important part of that ecosystem. And so they're a complement to a creator's business in that they give them new formats and new ways to attract, customers, followers, shoppers. And so with each, over the last 10 years, we've seen a new platform usually about every 2 years. So when we started, it was with blogs and Facebook and Twitter, and then of course expanded into Instagram and then Snap and now TikTok, Clubhouse, the LTK shops. And so we continue to see these new platforms. They tend to attract different generations of creators and different types of creators. And so they're really a propellant in this industry because obviously you need a way to connect with people. And then some of those people want to go shopping. And when they do, our creators bring them back to the LTK storefronts. And that's where the business happens.
Okay, interesting. So if I was on an app, a social media app, and I clicked through and I was watching, but it wasn't LTK's, I would somehow be navigated back to yours when I followed through the purchasing process.
You could. So we empower really shopping everywhere online for our creators, wherever they're creating content. And so we think of it as, on platform and off platform transactions. And so a creator can use social media platforms in whatever way they're engineered. So they can decide to link directly to a retailer site. They can link back to their LTK creator shop. And that shop hosts a number of links and then their entire shopping experience. But really anywhere that you're engaging with creators, they can actually bring shopping to you and make that turnkey and efficient.
Of course, you're across about 100 countries. You've got a presence in the UK, Brazil, France, Germany, Australia, China, South Korea. I mean, what a bird's eye perspective. I know as someone originally British that they're very forward in terms of online experiences and online shopping. How do we compare? How does the US compare to the likes of South Korea? Where are you really seeing significant growth?
Yeah. Well, creator is a worldwide trend. We just did a study where we found that even just domestically in the US, about 2/3 of people were inspired by their purchases by seeing creators talk about or feature those products online. And you're seeing that on a global level. Certainly, we've seen that across Asia, across Europe, across Australia. And really, it comes down to the way that we as society are engaging with people today. Ultimately, we're spending hours and hours on our phone every day. We're in aggregated content channels. Those channels are filled with content that our clients create. And so what's interesting about this industry is you've actually chosen to follow the people that you're seeing in your feed. And you might identify with them. For example, I'm a creator myself. My followers might identify with me because of where I live, or that I'm a professional, or that I'm a mother, or that I have pale skin or red hair, or there's something about me that they identify with, and I'm able to help them guide their purchases. And so we're seeing that all around the world and cross category, cross vertical, cross platform.
We've got about a minute left or so, Amber, but how do you ensure within that authenticity, safety as well for the people that follow you, and the way in which you sort of absorb social media and want it to only be a positive thing?
Very intentionally. So the LTK platform is a place where our creators come to create their digital storefronts. And that's really a really focused experience that's 100% dedicated to creator guided shopping. This is where our creators, they hold no inventory, they ship no boxes, they do no customer care, but they're making everything about their lives shoppable, whether it's the wagon that they use to take their kids around the neighborhood, or the dress they wore on TV today, or the makeup that they like to use, or the night cream. Every single thing that they're consuming, they're making shoppable. And we've engineered that platform in a way where it's not a social platform, it's a shopping platform. And so when you show up there, the only thing that you can do is shop. And we've seen now that about 8 million people every month are coming there to shop. And actually in the last 12 months, they've purchased $3 billion worth of products from our creators. And one of the most interesting things that I've seen lately is actually the rise of direct to consumer. About 20% of that 3 billion went straight to direct to consumer brands over the last 12 months, which is really exciting for us as we think about that different type of creator.
Amber, great to have some time with you. Thank you for spending it ahead of the holidays. Amber Vensbox, co-founder of LTK. Coming up, theaters still waiting for the first must-see film of the pandemic era. We'll break down the numbers and what's Hollywood hoping you'll go and watch this holiday season. That's next. This is Bloomberg. Let's talk a little bit about Hollywood now and its big holiday push as people slowly return to the theaters. Let's head to LA, where I'm joined by Bloomberg's Brian Eckhouse with more on what we can expect to see, not only on the big screen, but streaming at home as well. So if I was going to go out, what am I watching in the big screen right now?
Well, starting tomorrow, you can watch Disney's Encanto, a family animated film. House of Gucci comes out also tomorrow, and returning champions, Ghostbusters Afterlife and Eternals came out early November, and it's still in theaters now.
Always good to talk about House of Gucci when I think the whole film is based on a book written by one of our own journalists, so I'm desperate to go and see that. In terms of streaming, I mean, I'm seeing and hearing so much buzz surrounding Will Smith and King Richard. How is that going in terms of, because they've got a dual sort of release, right?
It does have dual release. It's really well reviewed by critics. It's in theaters, as you said. It's also on HBO Max. And we've seen so far this year that films that have that simultaneous release tend to see muted box offices. It did okay this weekend, but it was nowhere near the debut of Ghostbusters, which had only a run in cinemas.
I see. And there is the new GQ, what is it, Sexiest Man in 2021. I don't know why I know these things. Meanwhile, talk to us about some of the documentaries. I've been recently trying to look at all the best documentaries in Netflix. I keep on finding various lists of them. There's going to be a couple more, right, to be consuming?
There are. Tomorrow is tomorrow, Thursday, is the debut of the new Beatles documentary. It's 3 episodes over 3 nights. That's been years in the making. Peter Jackson, the celebrated director, is behind it, and it gives viewers a chance to sort of revisit the last few days of the Beatles. The idea has been that things were fraught between them toward the end. Apparently, this documentary shows that things may have been a little lighter. There had been more, perhaps, friendliness and laughter than we may have thought from the original documentary that came out after they broke up.
So, what are you going to be watching, Brian?
I'll be watching the Disney Plus version of The Beatles tomorrow night.
Okay. I'll try and tune into it too, if I can put the kids to bed on time. Brian Eckhouse, great to have some time with you. Thank you for leading us all up to, well, a busy time of consuming, whether you're watching the football, whether you're dining out on food, whether you're watching some of these new lineups as it comes to the world of streaming and the theatres. Meanwhile, do remember, Bloomberg Technology will be taking a couple of days off. Go, celebrate, enjoy your Thanksgiving here in the United States. But do make sure you tune in on Monday when we'll be bringing you a special extra episode of Bloomberg Studio 1.0 with Alphabet CEO Sundar Pichai. You do not want to miss it. Meanwhile, from New York, wishing you some very happy turkey feasting and indeed a bit of a relax outside of the markets, unless, of course, you're trading crypto, which never sleeps. This is Caroline Hyde in New York. This is Bloomberg.